Hey everyone, it is Evan here from the Trade Risk on Tuesday, November 5th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our dashboard here. You can see that major indices were pretty mixed today. They basically hovered around flat territory. Over the past 5 days, though, we are still firmly green. We're up about 1 to 2% across the major indices, and we are above all of those key simple moving averages across the board. If we scroll down and take a look at sector performance, it is semiconductor still dominating this rally. Energy getting a nice boost here to the top of the list, is followed by industrials. And on the downside, we have very defensive sectors here. We have utilities, we have staples, we have healthcare, all slightly negative here over the past 5 days. In terms of major markets, natural gas still out in front leading, followed by China and oil as rounding out the kind of top three. And on the downside, volatility, a little bit of an unwind there, silver, and high yield. So let's jump into the charts now. Take a look at what's gone on here. We always like to start with a weekly time frame analysis, even on the midweek video, just to get that big picture perspective. So when we look here at the S&P 500 on this weekly time frame, you can see we are slightly higher on the week. It's been a very narrow trading range so far this week. We started with this kind of gap up here, a little pop above last week's highs. We are at all-time highs, and notice we're kind of just meandering here. We're just kind of hovering and waiting for the market to perhaps make up its mind. We talked last week about the essentially the expansion in breadth and the number of market stocks, sectors, indices all kind of climbing to new all-time highs or new multi-year highs as the trend and the uptrend has sort of expanded out. We're still seeing that. We're seeing some short-term kind of maybe sluggish behavior now, just given the fact that we have covered a lot of ground in a short amount of time. We talked about in our last Friday video the sort of complacency out there after a big run, and that we would want to sort of expect or at least be on the lookout for perhaps a shakeout or some sideways action. And so far it seems like we're kind of seeing that this week. We're still up. We're still holding above the breakout level from last week. That is still our line in the sand. We talked about this last week. Basically, pick your index or pick your market or pick your stock that is recently broken out to new highs, new multi-year highs. In this case, for the S&P 500, we'll call it approximately this 3027 level. That's the area where we want to see the market stay above now. If we're going to keep this market holding up as bullish as possible with pent-up momentum, it'd be in the bull's best interest here to hold above that general area. So that's our line in the sand right now. It's from where we're trading right now to where that is. It's about 1.6% down to that area. So maybe a little bit of a pullback, kind of a retracement of last week's range, and to see buyers step in around this pullback area, I think that would be a healthy sort of action here for the market. But of course, it doesn't matter what I think. We're going to just continue to analyze this on a day-by-day basis. For now, trend is up. The bull case is pretty strong right now. Short term, we are a bit frothy here, so do keep that in mind. But so far, bulls look pretty strong here. If we go to the Russell 2000 next, you can see this is an interesting spot now. It has climbed to the top end of this range, this 159 to 160 area. It's been below there since last September of 2018. If we go down to a daily chart now, you can see it pretty much marched up here in a fairly straight line. It had a little bit of this outside reversal today, so it tried to push above 160. It failed up there, and it closed near the lows. So a little bit of a kind of short-term exhaustion signal here. This is something that usually requires follow through. So we need to see if sellers can actually kind of follow this up tomorrow with some more selling. But for now, kind of coming into resistance after a pretty much 10% straight line rally in the Russell 2000, I think it's pretty reasonable to expect some sideways movement or little digestion here before it tackles this resistance or before it breaks out. And if it doesn't, if we do start to break out here, then, the chase is on, because this is a pretty important level here. It's been failing here for over a year now. So I think if we start getting closes over 160, again, this speaks to sort of the expansion here in the bull case right now, and that would be very optimistic, I think, for just the general market as a whole. Last but not least, if we look at the NASDAQ 100, you can see this is up today. You can see kind of just going a little bit sideways here over the past 2 days. I mean, it was up yesterday. It had the gap up. It retraced the gap, and then it still kind of closed strongly. It's still up, nicely here in pretty much a straight line as well. It broke out to new highs, one of the earliest, and this is continuing to sort of act well and act as a leader right now, is the NASDAQ 100. So that's the roundup here for markets. Pretty quiet, all things considered, just kind of extending the bull case. We got some short-term complacency. We got some strong intermediate term kind of expansion to this upside here. So know your time frame, and take a look at those recent breakout levels as kind of a line in the sand for those shorter term considerations. So let's jump into some other markets now. Go to TLT next, which you can see is unraveling the progress from last week. We were up about 1.5% here in the TLT. We've given it all back and then some. We made a new close here, or we took out the close from the 28th. We still have the close back down here from September. So we're still, if we kind of zoom out a little bit further, you can see we're still basically in a longer sideways consolidation, pullback, whatever you want to label it, but essentially haven't gone anywhere since mid-August in this market. So, TLT coming back down to some levels where you'd expect it to get some interest from bulls down here into the 130s, into the mid 130s. We'll see if that happens. For now, short-term trend is down, in the process of potentially making some new recent lows here. If we go to gold next, you can see this is kind of in a similar situation. Still, it's been essentially going sideways here since mid-August as well. There's no trend to speak of. It tried to get going a couple of times up here over 140 or 142, I should say. But that has, pretty much failed. We've fallen back down now into the bottom end of this range. A little uptick in volume today. So once again here, gold kind of under pressure, and we'll see if buyers can start to step in again in this 136 area. 130, actually, I guess it would be more like 138 area once again. If we look at silver, silver here back to its sideways movement as well. All of these markets that have been trading pretty similar to one another, the gold, silver, TLT markets have all kind of fit into the same pattern here, where we're again to moving sideways and kind of digesting the strong run-ups from a few months ago. If we look at a little more excitement, we can look at energy here, which USO now is breaking back above the past 2-week highs. We had a kind of a short-term rug pull or shakeout last week, where we kind of pulled back, looked like, or it is proving now that it was a higher low that kind of got put in here, maybe extending around this slope here, but put in some type of higher low there. We're moving back up to highs. This $12 area has been resistance. There's a lot of overhead supply there, so do keep that in mind. But for now, USO is knocking on that resistance, and natural gas is starting to kind of fly away here. Heavy volume coming in here, big moves to the upside, starting to break through some prior key levels. So short term is extended to the upside, but certainly getting some traction here by the bulls on this trade now in natural gas on the long side. So that's it. That's what I got for the midweek video. We still got some earnings out there. So do keep that in mind. We still have catalysts out there from individual companies. So sectors always influenced by that, and of course the surrounding correlated stocks. So be aware of that. Otherwise, let's take it one day at a time. We'll see how this market closes out, and that should be it. So thanks so much, as always, for tuning in and watching. You can subscribe on our YouTube channel. Follow us at The Trade Risk. We'll be back tomorrow with the trade ideas video. That's intraday, happens usually a couple of hours before the market close. So for some swing trade setups and ideas, things that we're looking at, technical setups that look good, check back in tomorrow. Thanks so much. We'll see you in the next video.